are Wall Street investors likely to push back on some of those initiatives?
I think, like with everything else, some will and some won't. But what's really critical is in this environment, when innovation is critical, when we are fighting, frankly, chaos with thoughtfulness and framework. The idea of being allies of the light means being long-term, means finding proxies for quality, again, for innovation, creativity, and resilience. So I think there are some Wall Streeters that are going to fight back, but for the most part, we're looking forward.
What about things like, PE really coming into the spotlight, like private equity? I mean, Senator Elizabeth Warren, if she has any place in a cabinet or any sort of influence over Joe Biden, I mean, how does Wall Street look at something like that?
I think there are those that are, that are worried because the status quo has worked for them financially. The bottom line is it is inevitable that we will get greater transparency and, frankly, greater equity as a necessary. And so when you see people, like Andrew Yang and like Bloomberg and like Steyer, speaking up for transparency and equity and innovation, that's gonna overwhelm the status quo.
Erika, we've heard some investors. Mike Novogratz last week had told me that Biden would be good for the country, but bad for markets. Last night, we've heard Joe Biden make his case for why he thinks he could be good for the economy. Do you think Wall Street is picking up what he's putting down?
I do, but there's a big difference between the short-term reaction and the long-term fundamentals. And so I think it's the long-term fundamentals that are going to win out. And ultimately, we know historically the markets do better under Democratic administrations. So that's just a fact. And again, I think that it's the long-term structural issues, despite a near-term possibly dip on the worries, that's going to win out.
Speaking of the long term, we have to look forward to a bigger stimulus package, whether there's a Republican or a Democrat in the White House. How are investors dealing with that reality that America will be in so much debt?
Right. Well, the bottom line is, if you think back historically, think to the Great Depression, the percentage of stimulus as it relates to GDP right now, it's reasonable. We can handle it. We can handle it if we know we're on the right track. And so stimulus, it needs to be, monetary to support us, but ultimately it needs to be fiscal. We need to have, proper spending that's going to bring returns. Spending on infrastructure, spending on education, spending on correcting racial injustice, and of course, spending on technology, spending on all the trends that have already been in place pre-COVID. This kind of spending is going to drive the kind of growth that will allow us to deal with the debt that we have to accumulate now.
Erika, what's the limit, though? Because a big question was, how far to the left is Biden prepared to go? He seemed to really try and draw the line down the center, but there's lots of questions as to if he can really stay there. What freaks you out?
You know what? Everything freaks me out, and frankly, nothing freaks me out. What would freak me out the most is if we face the health crisis, the economic crisis, the racial crisis, the climate crisis, if we face them with chaos, that freaks me out. The reality is, if we face them with pragmatism and follow through, our economy and our society will be resilient. We will get used to whatever the new normal is. And so that's why in the long term, we can be constructive and hopefully not freaked out.
Well, speaking about making progress on some of these initiatives, you've seen when Biden had brought on Kamala Harris to be his vice president that a lot of white, wealthy donors had really come to her support. I'm wondering if a lot of this is symbolic or whether we're going to see firms start to make real changes at their own ranks as we see some of the government start to change itself.
I actually think we are. And the reality is this is inevitable. The pool of talent that's out there with people of color, with women, and with their being engaged in what's going on, it's inevitable. It's not at all symbolic. And we look around and you see examples like J.P. Morgan and making their new CFO a woman because she earned it. She probably more than earned it. But the idea of her now having access access to information, access to data, access to capital. Everything's about access. And so for those of us who do sustainable and impact investing, the idea of giving access to what is needed for progress to everyone, you can't beat that, and you can build it.
Erika, as we round this conversation, I'd love to just get your market perspective. What are you doing in a portfolio sense, for example, as we head into the election?
So with our clients, we are positioned, first of all, for the long term. So a proper asset allocation is the starting point, okay? And understanding your investment objectives, your values, how consistent you want to be. So that's the first thing. But then when we think about, let's say, in the equities, we want our clients, and our clients are positioned for innovation. You can do that with a value style, or you can do it with a growth style. But again, innovation and sustainability, corporate sustainability, is a proxy for growth and for resilience. And so that's how we try to position our clients in this market. Know there's volatility coming, but position for resilience.